Hello guys, PayPal just reported earnings and I've just read the report, and the first thing I want to tell you guys is, for a company that is not expecting to grow, this was a pretty good report. Uh, in my opinion, it was a really solid report. Uh, they are growing 15% year over year, not bad for a company expecting not to grow. Their net revenues grows 8%. Their operating cash flow was around 1.3 billion, which was really good in my opinion for a valuation that this company is. It's a really good cash flow. It was one of the strongest points of PayPal. They always have good free cash flows, and that's what we want. We want free cash flow. That's the money that you can invest, pay dividends, pay debt. That's the most important metric you can see in a company. That's basically the profits that the company have. Um, but even though this was a really good report, the PayPal stock is only up around 1%. And why? Because of forward guidance. For the fourth quarter of this year, they are expecting to grow around 6 or 7%, which is it is the number everyone is expecting PayPal to grow. But this last quarter it was 15%. It was basically a reacceleration of their growth, what is really good for a company. But that's what PayPal can do. It's a really solid company. Uh, we can always expect good management, buying back shares, solid profits, uh, good. Even though their margins are decreasing, but they still have really good margins, and they you can expect them to use their money really well, so that they can value accretive to the shareholders. Uh, Changes in the chief financial officer. They have another one, and the first words of the new CEO. My first 30 days leading PayPal have confirmed my belief in the company's strong assets and market position. Now we must harness these strengths and put the weight on the organization behind our most important priority. In the process, we will become more efficient so we can innovate and execute with higher velocity. The opportunity to drive greater impact for our customers and unlock profitable growth makes it an exciting time to be at PayPal. That is really exciting word for the new CEO that comes from Intuit, where it. I've done my research. Alex Chris was one executive on Intuit, which is a really good company, and they have done a really good job there. So it can be the catalyst for this stock. PayPal has been in the mud. They are a stock that is bit down, and now we don't know. They are trading at a valuation under a 10 forward PE, even though the other companies in this market, some companies trade at low PEs under 10, but PayPal is one company with a really good management, a really good product. But what will be the future? We have a new CEO that can improve the business and bring a lot of new things for PayPal, or they will suffer with other companies taking market share from PayPal. We don't know the future, but that's exciting. So that's basically the key things that this earnings report bought us. They released an investor update with a lot of good things. They reiterate their guidance. They talked about the last quarter. There are some good things I saw. This is their product. This is one thing I want to tell you in their business update. Basically, you see the last quarter, the total payment volume, and we have a reacceleration on their growth. They are, in terms of volume, their payment volume is growing a lot, most more than expected, at 15%. But their active accounts are maintaining. Their total revenues are not growing as the number of transactions. So what that means, their margins are suffering. There are a lot of competition on this business. PayPal is still one of the best products out there. I do use it. I love the product. When you want safety, you always try to buy with PayPal. I can talk for myself. Every time I have the opportunity to make a purchase, if I have the option to pay with PayPal, I will do it for sure, because I do really like the company. I feel more safe paying with PayPal, and I've already had problems on some purchases, and having PayPal doing the work to resolve that, it was really easy for me, and that's why I really like this product. And even though we can face a lot of competition from Apple Pay, Google Pay, I don't know what the future will bring to this company, but they still have a really awesome product. Venmo is growing a lot in the United States. They have Braintree, which is used in a lot of software, not software platforms. I mean, e-commerce platform, for example, and they have a really awesome product, but they will not. It's impossible to not be conservative on this company, because I'm not expecting them to continue to grow at 15 or 20%. It's not gonna be a really good thing for investors to think like that. So we have to be more conservative, and we might expect them to grow at 8%, which is a good. PayPal is a more mature company. They have a lot of cash, and they have a track record of their management to manage the money they have in hand really well. They say they are expecting to increase the share repurchase, doing a lot of buybacks in the future. They say they are expecting to use $5 billion to do share buybacks this year. At the valuation we are right now, it's almost 10% of the company. They have free cash flows around I don't know, maybe 5-6 billion a year, which is 10% of the company. If they do buybacks, we can have a trifecta. It is a company where we can have PE expansions, share buybacks, and maybe a reaccelerate of their growth and their earnings. With these three factors, we can have a multi-bagger in the next few years, and that's why I'm still looking at PayPal, and it might turn to be a really good investment for the future, guys. And that's basically the resume. They continue to improve solid results as well, even though guidance it's around 8% growth, but this is a mature company. Growing 8% will be normal, and it is normal. And at this valuation, with a lot of shares buyback, you can have a really good investment case for the future, guys. So I hope you find this information useful, guys. I hope you liked it, and please subscribe, guys. Bye.